Get your thoughts firstly on the session today.
Good session for the Australian share market. You know, when we started off this morning, things weren't looking too great. We finished off Friday with worries about China, that flash PMI number, the lowest number that we've seen in 15 months. And of course, over in the US, we had seen some of the staff numbers for interest rate expectations leaked on the US Federal Reserve website. And those interest rates were higher than what the market were expecting, 1.26% by the end of 2016 and then 2.1% by the end of 2017. So the SPI futures were pointing down, but in the end we were one of the only markets around the region to actually finish in the black. In fact, at the moment we're seeing the Chinese market, the Shanghai Composite, down 3.2%, the Hang Seng over in Hong Kong is down by 2.6%, and Australia managed a gain of 0.4%. Now, a lot of that gain was due to strength in the property space. We saw a massive gain, more than 2% from property stocks, and the utilities was the second best performing area on the market. But also the banks fought back, and we have seen in the last few sessions the big four banks, three of them now looking to raise the rates on investor loans, and that was seen as a positive for profitability and the supporting of dividends. And the other area was the material space. Gold was an area which was a clear standout, and BHP Billiton, I think some strong buying there, especially going into the close. And if I can just bring up BHP's share price, this is what BHP looks like over the past year. You can see that $25 has been a strong area of support. It looks like once again we've bounced off that $25 level. A lot of traders hoping that once again it'll hit that $30 level and maybe a short to medium term trade there.
My market reaction, should we see that Fed lift off, be it September?
I think that's one of the greatest risks in the market at the moment. There's two things that I think investors and traders are watching at the moment. One is the worries around China and the continued volatility and the softer growth numbers that we're seeing there. And we're seeing that reflected in expectations around global growth. The fact that we're seeing copper prices, the lowest level that we've seen since July 2009, crude oil prices now in a bear market, so down 20% from the peak, and iron ore still just above that $50 mark. So we are seeing commodities very much a reflection of lower growth expectations globally, and I think a lot of that comes from China. And then the other part is the US. Despite these lower growth expectations and weakness in China, the world is expecting the US to raise interest rates, and there's a lot of uncertainty around that. There's a lot of nervousness around that, and of course that's going to impact on asset pricing around the globe. For so many years now we've had virtually zero interest rates, and that helps to fuel investment in different areas, especially things like the share market. So I think those two risks are big ones in the market, and a lot of people are worried about this inflection point that we are seeing in terms of interest rates. I think one of the interesting places to watch in that area today was gold. Now, we have seen gold also at a 5-year low, and in Asia today really flat trading to slightly negative trade. But the fact that we've seen the Aussie dollar moving down so quickly means that it was a great day for gold stocks. We actually saw the gold subsector up by 4.2%, Oceana Gold gaining more than 9%, we saw Northern Star gaining more than 6%, and Regis Resources up more than 6%. So despite gold prices looking pretty soft, the fact that we are seeing that big drop off in the Aussie dollar, great news for some of those gold miners with assets in Australia, with costs in Australian dollar terms, but selling in US dollar terms.
Would you be cautious though, Julia, about jumping both feet in some of these gold stocks?
I think you'd have to say that gold is really a trade at the moment because it is a reflection of currency markets, and it's very difficult to invest in currency because of the volatility. So I think in terms of commodities, because so much of it is tied to volatility and to China and currency, I think it is a trade. So when I mentioned BHP, I said a lot of traders jumping in at 25, hoping for a quick profit to 30. But in terms of investment, I think it's still very murky. A lot of it is dependent on when that cycle for China turns, and economic cycles, we see it go up and down, but of course over the last 8 years now we've seen Chinese growth decreasing, and we want to see an inflection point in terms of Chinese growth, and we want to start to see it increasing instead of decreasing.